Imagine your bank account opening itself in seconds, a loan approved before you finish your coffee, and financial advice tailored to your every move, all without speaking to a single human. This isn't science fiction. It's the dawn of the 100% AI-operated bank. Welcome to the Economy Unpacked Daily YouTube channel. From Wall Street to your street, we share the world of money in a clear way. Today, we're unpacking a banking revolution that's already begun. The rise of digital banking isn't just a trend. It's a seismic shift driven by our demand for convenience. We live mobile-first lives and have grown tired of the slow, cumbersome processes of traditional banks. In fact, in countries like the US, UK, Canada, and Australia, over 80% of consumers now prefer banking online over visiting a branch. This transition went into overdrive after the COVID-19 pandemic, when remote financial management became a necessity, not just a preference. At the heart of this transformation is artificial intelligence. AI is no longer a futuristic add-on. It's rapidly becoming the new backbone of the entire financial services industry. It's the engine powering everything from real-time fraud detection and sophisticated risk scoring to instant payments and personalized product recommendations. For banks, AI-driven systems are proving to be faster, cheaper, and far more reliable than their human-led counterparts. This isn't a distant dream, it's happening now. Global financial titans like Chase, Barclays, NAB, and RBC are already experimenting with full automation, testing everything from AI-managed investment portfolios and algorithm-driven loan approvals to entirely branchless digital banking models. The movement is global, and it is irreversible. So, what exactly is a 100% AI-operated digital bank? Picture a financial institution with no physical branches, no human tellers, and no manual approval processes. These banks exist exclusively in the digital realm. There are no brick-and-mortar locations to visit, no staff shuffling paperwork, and no more waiting in long lines. Every single interaction from opening an account to securing a mortgage is digital, automated, and happens almost instantly. In this model, AI executes every single process from end to end. When you sign up, an AI system handles the onboarding, performs Know Your Customer KYC checks by verifying your documents and identity, and ensures regulatory compliance. It monitors all your transactions for suspicious activity, detects potential fraud in milliseconds, and even manages customer support inquiries. Human intervention is designed to be the exception, not the rule. The core of this operation is an autonomous decision-making engine that combines large language models, LLMs, for advanced reasoning with real-time financial data streams, behavioral analytics, and automated rule-based systems. This powerful combination allows the bank to make thousands of complex, highly accurate decisions every second without breaking a sweat. This incredible feat is made possible by a convergence of several key technologies. First, large language models, or LLMs, are the driving force behind a new generation of customer service. AI agents built on these models can understand natural language, answer complex questions with human-like nuance, provide personalized financial advice, and even help you build a budget or investment plan. This technology is poised to replace entire call centers. Next, machine learning engines are revolutionizing credit scoring. Instead of relying on static, often outdated metrics like a FICO score, AI algorithms can analyze thousands of real-time behavioral data points from your spending habits to your income patterns to build a dynamic and far more accurate picture of your creditworthiness. This not only makes loan approvals more precise, but also more inclusive for individuals who are overlooked by traditional scoring systems. For security, the combination of blockchain and AI offers an unparalleled defense. Blockchain technology provides a transparent, tamper-proof ledger for all transactions. While AI constantly scans for anomalies and automates fraud detection, together they create a financial ecosystem with security at its core. Meanwhile, robotic process automation, or RPA, handles the grunt work. These software bots replace manual back-office tasks like data entry, generating reports, updating account information, and performing routine compliance checks, freeing up the system to focus on high-value operations. Finally, advanced neural risk assessment systems can detect sophisticated fraud patterns within milliseconds and adapt their strategies as new threats emerge, a feat impossible for human analysts to replicate at scale. The result of this technological synergy is a banking model that is exponentially faster, cheaper, and more efficient. Imagine applying for a loan and getting approved in seconds, not days or weeks. AI can evaluate risk, validate your identity, and process the entire decision instantly. By eliminating the massive overhead costs associated with physical branches, large administrative staffs, and endless paperwork, AI banks can operate with near zero marginal costs. These enormous savings are passed directly to you, the consumer, in the form of lower fees, better interest rates, and even free services. Furthermore, AI enables a level of personalization never seen before. It can generate custom-tailored financial products, such as intelligent spending alerts, automated savings plans that move money for you, or even personalized interest rates based on your live financial behavior. And because these AI systems run 24/7 without interruption, you get continuous, instantaneous service, no matter the time of day or your time zone. For consumers, the impact will be profound and immediate. Payments and transfers will become ultra-fast, processing instantly through automated AI clearing systems. Your financial life will be managed proactively by AI, which can monitor your spending habits to help you budget, automatically adjust your investment portfolio based on market conditions, and guide you toward your long-term financial goals. You'll receive hyper-personalized recommendations for the best loans, credit cards, or investment strategies based on a deep analysis of your unique financial behavior. Above all, the automation of costly human operations means significantly reduced fees across the board. While this future sounds promising for customers, it presents an existential threat to traditional banks, as AI-native banks offer faster, cheaper, and more personalized services. Legacy institutions risk a mass exodus of their customer base, especially younger, digitally native generations. The pressure is on. Automate or die. The expensive and slow legacy systems that underpin traditional banking are becoming a liability. To survive, they must aggressively modernize and shift their operations from physical branches to agile, cloud-based ecosystems. This transition will also cause massive disruption in the workforce. Many familiar banking roles are set to disappear, including tellers, manual loan underwriters, call center staff, and back-office processors who handle paperwork. However, this disruption will also create a demand for new, highly skilled roles. The banks of the future will need AI oversight engineers to monitor the algorithms, data analysts to interpret the vast amounts of information, and cybersecurity experts to defend against new digital threats. Of course, a fully AI-driven financial system brings significant regulatory challenges. Governments in the US, UK, Canada, and Australia are already scrambling to create new legal frameworks to monitor AI's decision-making, protect consumer privacy, and ensure fairness. There are serious risks of an AI monopoly where a few powerful tech companies control the core financial models, giving them immense influence. Regulators will need to enforce transparency and prevent algorithmic opacity, where no one can explain how an AI made a particular decision. New standards will be required to guarantee consumer rights and prove that AI systems are free from bias, especially in critical areas like lending. This brings us to the profound ethical concerns. AI-operated banks will collect and analyze massive amounts of our personal data, raising urgent questions about privacy, surveillance, and the potential for misuse or catastrophic data breaches. Algorithmic bias is another major risk. If an AI is trained on historical data that reflects societal biases, it could unfairly deny loans or services to certain demographic groups, perpetuating and even amplifying inequality. Moreover, we must consider the risk of AI errors and vulnerabilities. A technical failure or a sophisticated cyber-attack on a fully automated system could lead to devastating financial losses or lock millions of people out of their accounts. Ultimately, as a society, we face a monumental question. How much autonomy should we give machines when it comes to controlling our money? By 2030, your financial life will be almost unrecognizable. Physical cards, bank branches, and paperwork will seem like ancient relics. Your identity will be verified through mobile biometrics or a universal digital ID, making PINs and forms obsolete. Instead of hiring a financial planner, most people will rely on AI advisors that have a real-time, comprehensive understanding of their entire financial picture. Finance will become predictive. Your AI assistant will warn you before you overspend, automatically optimize your bills, and alert you to financial risks before they materialize. Your traditional credit score will be replaced by a dynamic digital identity, built from your spending behavior, online footprint, and transaction history. The job market in this new AI bank economy will also be transformed. Roles that are repetitive and rules-based, like bank tellers, manual loan officers, and customer service agents, will largely disappear. In their place, new professions will emerge. We will need AI auditors to verify the fairness and compliance of algorithms. Data transparency officers to ensure consumers understand how their information is being used. Model ethicists to champion responsible AI development, and elite cyber defense specialists to protect the new financial infrastructure. Even in a world of AI-run banks, human oversight will remain absolutely crucial to manage ethics, ensure compliance, and make final calls on the most critical decisions. In summary, 100% AI-operated digital banks are set to completely reshape how we save, invest, borrow, and manage our money. They promise a future of unprecedented convenience, efficiency, and accessibility, making financial tools more powerful and available to everyone. This is the incredible opportunity before us. However, this revolution also carries the danger of creating new systemic vulnerabilities, ethical dilemmas, and a concentration of power if not managed carefully. The path forward requires a balance between embracing innovation and establishing robust safeguards. What are your thoughts on a future where an AI manages your money? What concerns you the most? Let us know in the comments below. And if you want to stay ahead of the curve on how deep tech is transforming our world, make sure to subscribe for more content.